Usually when we sit down to do a deep dive, we're looking at a success story or maybe a hidden trend in tech or history that feels, momentous in a positive way.
Right, something we can learn from, a new strategy.
Exactly. But today feels a little different. Today feels less like a movie review and more like we're standing over a body in a morgue holding a clipboard.
Wow!
We aren't here to critique a plot. We're here to determine the cause of death.
That is a pretty grim image, but it's entirely accurate. We are definitely performing a corporate autopsy today, and the patient on the table is one of the most valuable pieces of intellectual property in history.
We're talking about Disney's live-action Snow White. Now, we're recording this in February 2026, so the dust has, for all intents and purposes, settled.
The verdict is in.
It is. The movie's been out for roughly a year. The theaters are empty, the physical media is in the bargain bin, and the streaming numbers have plateaued. And thanks to some incredible investigative work by Pop Culture Crisis, relying on a really forensic report from Forbes and Caroline Reed, we finally have the official coroner's report.
And the findings are stark. I mean, really stark. The cause of death wasn't just bad reviews or internet trolls. It was a staggering, multi-organ failure of budgeting, strategy, and public relations.
Okay, so let's hit the headline number first, just to set the stake. Because we see headlines about flops all the time. A movie loses $20 million, the executives sweat a little, and life goes on. But this isn't that.
No, this is a whole other level. According to the breakdown we're looking at today, Disney didn't just fail to make a profit. They lost, and I mean just vaporized, approximately $170 million.
$170 million. That's not, we missed our quarterly projection. That is the GDP of a small island nation.
It's build a new hospital money. It's an almost incomprehensible amount of capital.
It really is.
And our mission today isn't to, beat up on the movie creatively. The internet has already done that to death.
Oh, yeah.
We want to understand how a corporation as sophisticated as Disney, a company that practically invented the modern blockbuster, lets this happen. We want to look at the mechanics of Hollywood accounting, the strange, almost perverse incentives of UK tax law, and the scorched earth PR strategy that essentially lit the money on fire before the tickets even went on sale.
And the best part, we aren't guessing. This isn't anonymous sources whispering to Variety or The Hollywood Reporter. This is based on government tax filings. It's hard data.
Exactly. The kind of data studios usually try to bury deep inside a general ledger, but because of how they filmed this, they just couldn't hide it.
So let's start there, the detective work, because I think most people, myself included until I read this, assume that Disney's finances are a complete black box.
They are.
Usually if I ask you, I'd say Avengers. The Secret Wars cost, you can't tell me the exact number, right?
No, I absolutely can't. And neither can almost anyone outside of a handful of executives at Marvel and Disney. Because in the United States, major studios are these massive conglomerates.
Right.
They bundle all their spending. If they spend, let's say, $1 billion on production in a single year, it's just one massive line item on a consolidated cash flow statement.
So it's all just content spend.
Exactly. They don't break it out movie by movie because, frankly, they don't want us or their competitors knowing their exact margin. They want to keep that veil of mystery.
But Snow White wasn't filmed in Atlanta. It wasn't filmed on a backlot in Los Angeles. It was filmed in the United Kingdom. And that, it turns out, changes the rules of the game entirely.
Completely. And this is the key to this entire deep dive. This is the Rosetta Stone. The United Kingdom has this mechanism called the Audiovisual Expenditure Credit, or AVE.
Okay.
Yeah. It used to be called the Film Tax Relief, but they've rebranded and tweaked it a bit. Basically, the UK government puts up massive welcome mat to Hollywood. They say, please, bring your circus to our town, hire our electrician, rent our sound stages at Pinewood, use our caterers, and if you do, we will cut you a check.
And it's not a small check. It's a rebate, essentially, a thank you gift.
It's massive. They offer a cash reimbursement of up to 25.5% of the qualifying production costs.
Okay, pause on that for a second. That is a 25% coupon on a multi-million-dollar purchase.
Right.
If you're a CFO at Disney, that is irresistible. You're telling me for every dollar I spend on set construction, on cameras, on salaries, I get a quarterback from the government.
It is, for all intents and purposes, free money. It effectively lowers the risk of any major production. It's a huge strategic advantage.
So why doesn't everyone film there?
Well, a lot of productions do, but the UK government isn't stupid. They don't just hand that cash over on a promise.
There's a catch.
There's a catch, and the catch is a strict paper trail. To get the credit, the studio has to prove that the money was actually spent in the UK. At least 10% of core costs must relate to UK activities, though in practice it's usually much, much higher.
Okay, that makes sense.
And to ensure total transparency, they require the studio to create a specific, separate legal entity for that specific movie.
A shell company.
Essentially, yes. The official term is a film production company, or FP. It's a standalone corporation. It has no other job. It doesn't make theme park rides. It doesn't sell plush toys. Its only purpose, its only reason for it is to make them.
So it's a legal container for all the money going in and all the money going out.
Precisely. It hires the actors, it rents the cameras, it pays the catering bills. Everything flows through this one isolated company.
And because it's a UK corporation.
It has to file public tax, legally binding, publicly available financial statements. Anyone with an internet connection and the patience to navigate the UK company's house database can look up these filings.
It's a back door into Hollywood's book.
It's the ultimate backdoor. It's not a leak. It's not a rumor. It's the law.
Which is exactly what the analysts at Forbes and Pop Culture Crisis did. They went digging. But they didn't look for Snow White productions, though. Disney is a little too smart for that.
Right. They always use code names to keep fans and, paparazzi off the scent during production. For Snow White, the shell company, the FPC, was called Hidden Heart Production.
Hidden Heart. That's a reference to the Evil Queen's box, right?
Yeah.
The one where she wants the huntsman to put Snow White's heart.
A little dark, maybe a little on the nose, considering the financial bloodbath that followed. But yes, that's the one. And here is where we have to give a specific shout out to an analyst named Valiant Renegade.
I saw this in the source material.
Yeah, the source highlights him specifically because he was the one who really cracked this code early.
He's an industry pundit on YouTube, right?
Mm-hmm.
A content creator.
He is, and he was tracking Hidden Heart Productions way, way before anyone in the mainstream media was paying attention. We're talking 2 years came out.
2 years.
Yeah, he was downloading these financial statements, these PDFs, the government, looking at the line items for cost of sales and administrative expense, and he was saying, guys, this math is out of control. This isn't a $200 million. This is on track to hit $300.
And at the time, people probably called him a hater or said he was just exaggerating for clicks.
Oh, absolutely. The mainstream outlets, Variety, Deadline, they were all printing the official press numbers saying, oh, the budget is around $200 million. But Valiant Renegade was reading the actual tax. He was looking at the hard evidence. And as we now know, he was spot on.
It's amazing. The truth was just sitting there in a public database the whole time.
The whole time. You just had to know where to look.
So let's get into those numbers, because there's a huge difference between what Disney planned to spend and what they actually spent. We need to distinguish between the budget and the final cost.
This is a crucial distinction. It's probably the most important concept in understanding a flop. The budget is the wish list. It's the PowerPoint presentation the producers show the board of directors to get the green light.
It's the sales pitch.
It's the sales pitch. We can make this amazing movie for $150 million. It'll look great and it'll make $1 billion. It's a theoretical number based on a best case scenario.
And the cost.
The cost is what happens when reality. It's what you've spent when the cameras finally stop rolling, when things break, when the schedule slips, when an actor gets sick, when you realize a scene just doesn't work.
And for Snow White, reality hit hard.
Yeah.
What was the final tally on the cost side, according to those Hidden Heart filings?
Okay, so according to the Hidden Heart Productions filings, as of the end of 2020, and you have to remember this is still 3 months before the movie even premiered.
So they were still spending money at this point.
Oh yeah, post-production, visual effects, final touch. But as of that filing, the total production cost was $336.5 million.
$336.5 million. Let that sit there.
It's an astronomical number. It's hard to even wrap your head around.
Put it in perspective for us. How does that compare to other huge Disney blockbusters?
Well, that's what makes it so shocking. It's more than Disney spent on Rogue One, a Star Wars story.
A massive space opera with star destroyers and huge battles.
It is more than they spent on the first Guardians of the Galaxy. And here's the one that really gets. It is significantly more than the 2017 Emma Watson Beauty and...
Okay, that comparison is just stunning.
Yeah.
Because Beauty and the Beast made $1.3 billion. And visually, that movie had grand ballrooms, huge musical numbers with thousands of extras, entire castles filled with talking, dancing, CGI household objects.
Be our guest.
Exactly. Snow White is fundamentally a story about a girl in the woods with 7 dwarves in a small cottage. How do you burn $336 million on a story that intense?
Well, part of it was literally burning money. There was a massive fire at Pinewood Studios early in the production.
Right. I remember hearing about that vaguely, but I didn't realize the financial impact was that big.
It was significant. According to reports, it wasn't just a small fire, it ravaged the set. A huge medieval-looking set that was built was just gone.
So you have to rebuild it from scratch.
You have to rebuild it. And when a set burns down, you aren't just paying for wood and nails and paint to rebuild it. The real cost, the killer cost, is time. And in Hollywood, time is the single most expensive commodity there is.
Because the clock is always ticking.
The clock is always... You have A-list actors on payroll, sitting in their trailers, cost hundreds of thousands of dollars. You have a crew of 300 people standing around, needing to be fed. You have equipment rentals for cameras and light by the hour. The production momentum just grinds to a halt, but the cash burn accelerates.
And insurance only covers so much of that, right? They'll pay for the physical set, but not for the lost time.
Exactly. Insurance covers the tangible damage, but it rarely covers the full opportunity cost of a schedule or the inflation that hits when you have to extend production by several months. And you have to remember the timeline. This movie was being made during a period of massive global inflation.
2022, 2023. Everything was more expensive.
Everything. The cost of labor, materials, lumber, energy, catering, everything went up between the day the budget was approved and the day they finally wrapped. So every delay just amplified that.
But it wasn't just bad luck with the fire, was it? The source material makes a big point to mention delays and reshoot. And in Hollywood, reshoots are usually code for, we watched the first cut of the movie and it didn't work.
That's exactly what it is. Reshoots are the silent killer of profitability. And this leads us directly into the creative choices, because the reshoots weren't just about tweaking a line of dialogue here or fixing a bad lighting setup there. There were fundamental pivots in the entire concept of the film.
And this is section 3 in our outline. And I think this is probably the single biggest driver of that bloated budget. We have to talk about the dwarf controversy.
It's a perfect, almost tragic case study in corporate indecision and reactionary filmmaking.
So take us back to the beginning. How did this all start?
It all started when Peter Dinklage, the very famous and respected actor from Game of Thrones, went on a pod and he blasted the studio. He basically said, you're being progressive on one hand by casting a Latina actress as Snow White, but you're still making this backwards story about 7 dwarves living together, and it called it out very, very.
And Disney, a company that is famously sensitive to this kind of PR, panicked.
Panic is the right word. They immediately scrambled to change the concept to avoid a PR nightmare. They put out a statement saying they were consulting with members of the dwarfism community and were taking a different approach.
A different approach.
Right. And then we saw these leaked set photos of what this different approach looked like. And it was 7 magical creatures.
Which basically looked like 7 random people of different genders and ethnicities in, like, bandit costumes.
That's a very good description. No prosthetics, average height, diverse backgrounds. It just looked bizarre.
And the internet absolutely hated both sides.
It pleased no one. It completely annoyed the purists who wanted the classic story, and it just looked cheap and nonsensical to everyone else. The consensus was it just looked like some people in a park doing LRRPing.
So they filmed scenes with these magical creatures, right?
They did, which means they spent millions of dollars on costumes, on actors' time, on set time, for footage that would eventually be thrown in the garbage.
So that money is just gone.
Poof, vaporized. Because after that backlash, Disney pivoted again. They decided to go back to the classic 7 dwarfs concept. But, and here's the multi-million-dollar mistake, they didn't want to hire dwarf actors because they were still scared of the initial Peter Dinklage criticism.
So they went full CGI.
They decided to create 7 main characters, 7 of the most iconic characters in their entire library, entirely in a computer.
Just think about the cost implication of that for a second.
It's mind-boggling. If you hire 7 talented actors from the dwarfism community, you pay them scale, maybe a bit more, you put them in costumes, a makeup scene, done. It's a fixed, manageable cost.
Right, you could probably get all 7 for, what, a few million for the entire shoot?
Best case. Instead, they had to pay an army of visual effects artists at a company like MPC or ILM to digitally paint every single frame of those 7 characters. Every time they move, every time they blink, every time they interact with a real object or with Snow White, that costs thousands upon thousands of dollars per second.
It's an exponential increase in cost and labor.
The source argues, and I think brilliantly, that they could have saved tens of millions of dollars just by hiring real actors.
So they paid to shoot the magical creatures, they scrapped that footage, so that money is gone, and then they paid an absolute fortune to animate CGI dwarves over whatever new footage they shot. They essentially paid 3 times for one job.
And the end result? It looked uncanny. It had that weird, weightless, video game cutscene look. It looked like a cartoon trying to be real, and it just didn't work for a lot of people.
That leads perfectly into the general visual aspect of the film. The source was remarkably unkind about the way this movie looked.
Laughing. Unkind is a very diplomatic word. The source described the color palette as brown and yellow. They literally, and this is a quote, compared the visual aesthetic to a toilet.
That's hard. But having seen the clip, is it fair?
I mean, look, visually it was very desat, very muddy. And this gets to the green screen prop. Snow White is a story about nature. It's about the lush forest, sunlight filtering through the trees, the animals, the babbling brook. It's supposed to be an organic, vibrant...
But they shot almost the entire thing on sound stages at Pinewood Studios.
Exactly. And this goes right back to the tax credit. They had to spend the money in the UK studio system to get that 25% rebate.
So the tax incentive actually incentivized them to stay indoors and build a fake forest instead of going outside to a real one.
The incentive worked against the story. The result is that digital volume look, where the actors are clearly standing on a shiny floor with a gigantic LED screen behind them. It feels claustrophobic and artificial.
There's no depth.
There's no depth. The source makes the argument that if they had just hired a good location manager and gone to a real forest, which the UK has plenty, it would have been cheaper and it would have looked like $1 billion.
Nature is free production value.
Nature is free. Lord of the Rings still looks incredible 25 years later because a mountain is a mountain and a forest is a forest. CGI from 2024 is going to look dated in 2026. And in this case, a lot of people argued it looked dated on arrival.
Okay, so we have this absolutely monstrous $336.5 million spend. But to be fair to Disney, we have to subtract that coupon we talked about earlier.
Right. They did get that big check from the UK government, the audiovisual expenditure credit. The reimbursement came out to $64.9 million.
So that's real cash back in their pocket.
Real cash. So if we take the $336.5 million gross costs and subtract the $64.9 million refund, the net spend, the actual cash that left Disney's bank account to create this, was $271.6 million.
Let's call it $272 million, just to get the movie in the can. That is a terrifying starting line for any movie. You have to run a marathon just to get back to zero.
And that brings us to the box office postmortem. The movie is finished, it's marketed, it opens, and thud.
It just did not connect with audiences. Give us the damage.
The opening weekend worldwide was $87.3 million. That was 13% below the already lowered MPESC forecast.
So it underperformed even the lowest expectations.
It did. And then the word of mouth was not good, so it fell off a cliff. The total global run, every ticket sold in every theater on Earth from start to finish, was $205.7 million.
Okay, so here is where we need to do the important movie math lesson. Because a casual listener, someone who doesn't follow the industry, might hear those numbers and say, okay, they spent $272 million, it made $206 million, so they lost about $66 million. That's bad, but it's not the catastrophe you described.
I wish it were that simple. That is the trap that everyone falls into. They see that $206 million number and they think Disney gets $206 million.
They forget the 50-50 rule.
They forget the theater's cut.
Let's break that down, because this is where the real financial pain lives.
When you, the listener, buy a movie ticket at AMC or Regal or Cinemark for $15, Disney does not get. The theater has to keep the light. They have to pay their staff, pay rent on a massive building, clean the popcorn off the floor. The theater keeps a significant cut of that ticket.
And that cut varies by country.
Right, it varies wildly. In the U.S., for a big Disney movie, the studio might get a favorable split, maybe 60% of the ticket price in the first couple of weeks. But in Europe, that number drops to closer to 40%. In a market like China, it can be as low as 25%.
So for a global release, the industry average...
We use 50% as a rough but reliable rule of thumb. The studio, on average, keeps about half of the total box office.
So if the movie made $205.7 million total at the box...
Disney's share, the actual revenue, the cash that comes back to Burbank to be deposited in their bank account, is approximately $102.9 million.
Let's call it $103 million.
$103 million in...
And the net production cost, after the tax credit, was $271.6 million.
Correct.
So take the $103 million in income, subtract the $272 million in cost.
And you get a theatrical loss of $168.7 million.
There it is.
That's the black hole.
And that doesn't even include a single dollar for marketing.
No, that is just the production hole. The marketing budget for a global tentpole movie like this is easily another $100 million, maybe $150 million.
So the true loss is closer to 270 or 300 million.
Easily. But the source explicitly leaves marketing out of the final calculation because it's just too depressing. It adds insult to catastrophic. Even if you pretend marketing was free, they still lost nearly $170 million.
Where does this rank historically for Disney's live action? Is this the biggest bomb ever?
It's way up there, or I guess way down there. Out of Disney's 21 live-action adaptations, it is the 5th lowest grossing of all time. But that's not even the worst stat.
Yeah.
If you adjust for inflation, which we absolutely should do to be fair to older movies, it drops to the second lowest. The only thing that did worse in inflation-adjusted dollars was the 1994 live-action Jungle Book.
I honestly didn't even know there was a 1994 Jungle.
Exactly my point. That's the company, this $336 million movie. It performed worse than Christopher Robin, which quiet little movie. It performed worse than 102 Dalmatians. It even performed worse than the 2020 Mulan.
The one that came out during the pandemic.
The one that was released during a global lockdown when most theaters were physically closed, and they were trying to charge people $30 to watch it on Disney Plus Premier Access.
When you are losing to a movie that had every possible excuse to fail, you don't have an excuse. You have a fundamental problem.
A massive fundamental problem with the product itself.
Okay, so we have the, $170 million loss. We have how the UK tax filings, the fire, the CGI overspend. Now we need the why, because bad movies make money all the time. The Transformers movies make money, Venom makes money. Why did the audience actively reject this one?
This is the most sensitive part of the deep dive, but to its credit, the Forbes report was very, very honest about it. It doesn't dance around the issue. It points directly to the PR disaster.
We have to talk about Rachel Zegler.
We do. And look, actors are often prepped with talking points for a press tour, but the strategy employed here, what the source calls the scorched earth strategy, was just baffling from a business perspective.
For listeners who maybe missed all the TikTok clips and YouTube compilations, what was the core message she was putting out there during the promotion?
Instead of promoting the movie as a celebration of a beloved classic, she repeatedly framed it as a correction of a problematic original.
She sounded almost embarrassed by the 1937 film.
She did. She called the original extremely dated. She called the prince a stalker who follows Snow White around. She mocked the idea of a woman dreaming about true love, saying things like, it's not 1937 anymore, and that Snow White's story would focus on her becoming a leader, not finding romance.
It felt like she was scolding the potential audience for liking the original story.
Precise. It's what you might call antagonistic marketing. You are telling your core demographic, the moms and grandmas and Disney adults who grew up loving Snow White and were ready to pass that love on to their kid, that they were wrong to love, that their nostalgia is problematic and needs fixed.
It's a very strange way to sell a product, to tell the customer their taste is bad.
It's unheard of. And then there was the more overtly political angle.
Anyway.
The source material highlights that Zegler was very vocal on social media about a number of polarizing political issues, specifically regarding the conflict in Gaza, and making some very pointed anti-Trump comments, all during the promotional window for the film. Now, regardless of where you or the listener stand on those issues personally,
from a business standpoint,
from a pure business standpoint, it is a flagrant violation of the Michael Jordan.
Republicans buy sneakers, too.
Exactly. When you are marketing a 4-quadrant, family-friendly Disney movie that costs $336 million, you need everyone to buy a ticket. You need the red states and the blue state. If the lead actress is engaging in heated political debates online and essentially telling half the country she dislikes them, you're giving millions of people a permission structure to just stay home.
They no longer see it as just a movie. It's a political statement they may not agree with.
It becomes homework. Or worse, it becomes a product from someone who you feel actively dislike. And why would you pay money for that?
The source calls this the doomed from the start theory.
Right. By the time the actual premiere happened, when she was wearing the gown and smiling on the red carpet and trying to pivot back to just being a princess, it was too late. The narrative was already set. The audience had already decided, I don't like this vibe. I'm sitting this one out.
And usually, when a movie with a female or minority lead flops like this, the media narrative is quick to blame trolls or incels or racism.
They absolutely tried that playbook here as well. But the Forbes report and the source analyzed notes that this time, that just didn't.
I know.
Because the controversial comments came directly from the actresses. They were on video in major interviews. It wasn't some anonymous internet comment section theory. It was the official marketing strat, and it backfired spectacularly. The reporting makes it clear. The backlash wasn't about her ethnicity. It was about her expressed attitude toward the source material she was supposed to be honored.
So the movie bombs. The money is gone, the autopsy is complete. Now we enter the final phase, the one the internet lovingly calls the cope. How did Disney try to spin this massive financial disaster to its shareholders and the public?
The spin was dizzying to watch in real time. First, they went straight to the streaming defense. It's the hashtag one movie on Disney.
We saw the triumphant posts on social media. What does that actually mean financially?
It means nothing. It means absolutely, positively nothing.
Zero. It doesn't generate any new money.
Unless you can prove that millions of people who are not already subscribed to Disney Plus signed up specifically to watch Snow White and then stayed subscribed for years to help pay off that $170 million hole, it's a vanity metric.
It's just a number to put in a press release.
That's all it is. Existing subscribers watching a new movie on the service doesn't generate new cash. In fact, it just costs them money and bandwidth. It's like a failing restaurant bragging, look how many people are eating at our all-you-can-eat buffet. Great, but they already paid the entrant. You aren't making extra money on the mashed potatoes.
Okay, so the streaming argument is out. What was next? The merchandise defense, right. We'll make it back on lunchboxes and dolls.
Which is the oldest and laziest lie in Hollywood. Merchandise sales track with box office performance and cultural relevance, it's an echo, not a cause.
If nobody likes the movie, nobody wants the doll.
Nobody wants the doll. You cannot sell 1 million t-shirts for a movie that nobody saw or cared about. The merchandise for Snow White ended up in the same clearance bin as the blue.
But then came the biggest shield. Final, ultimate defense. The Lilo and Stitch shield.
Yes. This is the portfolio theory. So immediately after Snow White crashed and burned, Disney released their live-action Lilo, and it was a monster. A genuine, old-school blockbuster. It made $1.1 billion.
So the corporate argument from Disney becomes, who cares about the Snow White loss? Look at all this Stitch money. It more covers the loss. We're still profitable overall.
And that, from a strategic business perspective, is what we call the offset.
Why is it a fallacy? I mean, money is money, right? If I lose $100 on one bet and win $200 on another, I'm still up $100.
Think about it like an investment portfolio. If you buy 2 stocks, Apple and a risky startup, and the startup goes to zero but Apple doubles, you might break even overall. But that wasn't the plan. The plan was for both of them to go up.
Lilo and Stitch was supposed to make profit for itself, not to pay off another movie's debt.
Exact. The $1 billion that Stitch made was supposed to fund the next 3 animated movies, or pay dividends to shareholders, or build a new cruise ship, or give everyone a raise. Instead, a huge chunk of its profits are being used just to fill the $300 million hole that Snow White dug in the ground.
It's a massive destruction of potential value.
A catastrophic destruction of value. As the source so eloquently puts it, nobody spends $330 million hoping to write it off. That's not a business strategy. It's gambling.
The source actually uses that specific term, gambling addicts.
It fits perfectly. When you look at the complete lack of cost controls, the ballooning budgets, the reactionary decision-making, the over-reliance on tax credits to soften the blow of any potential failure, it feels like a studio at the roulette, just betting everything on red and hoping for the best.
They aren't managing risk. They're just assuming the brand name Disney will save them every single time. And this time, it didn't.
This time, the ball landed on black.
So, bringing it all home for the outro here, we have a perfect storm. We have bad luck with the fire on set. We have bad management with the endless, expensive reshoots. We have bad creative instincts with the off-putting CGI dwarves and the muddy visuals. And we have a catastrophically bad relationship with the audience, fueled by the PR.
It is the textbook definition of a corporate disaster. I mean, you could teach a business school class on this movie. Everything that could go wrong did go wrong.
So does this mean the whole live-action remake trend is dead? Should Disney just stop?
No, not at all. And Lilo and Stitch making $1 billion proves that. The audience doesn't hate remakes, or as the source calls it, slop. They hate bad.
They hate being lectured to.
They hate being lectured to, and they hate movies that look ugly and cheap despite costing a fortune. If a movie is fun, if it respects the source material while updating it cleverly, if it looks good, people will show up in droves.
So what happens next? We know they have the live-action Moana coming up.
We do. Live-action Moana, starring The Rock, is set to drop in July of this year, 2026. The billion-dollar question, did they learn the lesson from Snow White? Did they control the budget? Did they use real water? Or did they spend $100 million on CGI water? We're all going to find out very
I want to leave the listener with one final provocative thought from the source material that really stuck with me. We talked about that UK tax credit. The government gives back 25% of the production spend.
Right. It's a huge incentive.
The force suggests that these incentives, which are meant to help the industry, might actually be enabling this reckless behavior.
Now that is the really interesting and frankly disturbing takeaway.
Explain that.
If you're a producer and you know deep down that no matter how much you overspend, the government is going to rebate a quarter of your cost, does it make you lazy? Does it make you less?
Does it make you say, let's just do the expensive reshoot, the taxpayers will cover part of it?
Exactly. Let's fix it in post with $1 million of CGI because we'll get $250,000 of that back anyway. It creates a moral hazard. The risk is partially subsidized by the public.
It's too big to fail, but for individual movies.
It turns the British taxpayer into a silent, unwilling financial partner in a very bad investment. You and I, indirectly, are helping to pay for those weird-looking CGI dwarfs.
So next time you are sitting in a movie theater and you're watching the end credits roll on a huge blockbuster, look for that logo, filmed in the United Kingdom.
And just remember, somewhere in a government database in London, there is a tax file with a code name like Hidden Heart or Blue Harvest, telling you exactly how much that spectacle on screen really cost.
On that rather sobering note, thanks for diving deep with us. We'll see you on the next.
See you next time.